Hey everyone, welcome back to Corporate Decoder. Today we're diving into Marine Products Corporation's proxy statement, a document that might sound boring, but trust me, it's got some juicy details, like a boardroom battle over bylaws. More on that later. So what's this report about? In short, it is a sneak peek into what Marine Products, a boat manufacturing company, plans to do at its next big meeting where shareholders get a say. This includes electing directors, dealing with the company's accountants, and, as I mentioned earlier, a potential power struggle about control over the company's rules. Let's hear from the CEO, Ben Palmer. He talks about some challenges, mostly due to dealers having too much inventory and rising interest rates making it harder for people to buy boats. Despite this, he's optimistic, mentioning cost control measures and a strong cash balance. They even returned a good chunk of money to investors through dividends and a special dividend. He also brags that Chaparral is the best performing and Robolo held the fourth highest retail market share. He acknowledges two long-serving directors that aren't standing for re-election. Here is where Marine Products tries to show they aren't just about making boats, but about being responsible too. They discuss their commitment to the environment, employee well-being, and ethical practices. They're planning to release a corporate sustainability report soon and have committees overseeing things like climate change policies, human capital management, and cybersecurity. They're trying to tell you they aren't just concerned about the dollars, but the world around them. Alright, let's break down what's up for a vote at the shareholder meeting. A big one is electing 4 directors to the board. This is usually a standard procedure, but these are some important people who will be steering the direction of the company. Besides that, shareholders get to vote on whether to approve Grant Thornton LLP as their accounting firm. Basically, the people who keep the books balanced. Finally, there are a few proposals to change the company's charter, its core governing document, which brings us to the good part. This section dives deep into how the board of directors is structured, who's on it, and what the different committees do. The board has several committees such as the Audit Committee, Human Capital Management and Compensation Committee, and Nominating and Corporate Governance Committee. These are important for those directors who are independent, basically not part of company management. The company depends on those independent directors. However, because a group that includes Gary, Pamela, Timothy, and Amy Rollins controls in excess of 50% of the company's voting power. How much do these directors get paid? Non-employee directors receive an annual cash retainer and an equity grant in the form of company common shares. Committee chairs get extra cash retainers. This is all designed to attract and keep qualified people on the board and keep their interests aligned with the shareholders. In 2024, being a board member paid out $75,000, while being a committee chair added another $6,000 to $20,000. Some also earned $50,000 in stock rewards. Time to meet the people. The proxy names the director nominees and other board members. Gary and Pamela Rollins are not standing for re-election, but Stephen Lewis is a new nominee. This section gives background on each person's experience. For example, we learn Timothy Rollins is a vice president at Lolo Inc. and Susan Bell was a partner at Ernst & Young. These bios are meant to assure you that these people are qualified to make big decisions about the company. Shareholders get to vote on 4 Class 3 director positions. The nominees are Amy Chrysler, Susan Bell, Timothy Rollins, and Stephen Lewis. If elected, they'll serve until the 2028 annual meeting. The board is recommending you vote for these nominees. It mentions again that Gary and Pamela aren't standing for re-election and after a long career will continue to serve until the 2025 meeting. This is where you vote to approve the company's choice for its accounting firm, Grant Thornton LLP. It's been the company's auditor since 2004. The board recommends a vote for this as expected. Now for that juicy bylaw battle I told you about earlier. This is a big one. Declassifying the board. Currently, directors serve staggered 3-year terms. Declassifying would mean all directors are elected every year. The board recommends voting for this. They claim this will increase director accountability to stockholders. However, this also means that if the amendment is approved, the group of large shareholders will be able to remove any or all directors without cause at any annual meeting. This proposal aims to make it easier for shareholders to call a special meeting. A special meeting is kind of like an emergency board meeting to address something important. The problem is a provision in the company charter. The stockholders have requested that the company remove Article 50T of the charter to make it possible for them to call a meeting. If approved, the controlling stockholder group would gain the ability to call a special meeting. They would have the power to remove one or more directors if both this and proposal note 3 are approved. To make it less difficult to get rid of directors, the company wants to get rid of a provision in its charter that requires a 66.7% vote to remove a director. The board, having heard the stockholders' preferences, has decided to recommend that the stockholders adopt an amendment to eliminate the provision. This final proposal in the shareholder mutiny tries to bring the power back to the people. It would remove a requirement that 66.7% of stockholders to amend their bylaws. The board recommends that you vote for this proposal. Now, who are the folks running the show? Besides the CEO we already heard from, there's Michael Schmidt, the CFO. They're the key decision makers. So, how much are these executives making? That is what compensation, discussion, and analysis is all about. We have a summary of the annual compensation for these executives, as well as their plans. It goes over the total number and compensation for each year in the past. The goal is to provide strong financial performance, as they say, to attract and retain highly qualified individuals, with a strong emphasis on teams working together to capitalize on opportunities and solve problems. This confirms that the Human Capital Management and Compensation Committee has reviewed all the data to make sure this analysis is accurate. Did everyone follow the rules and report their stock ownership properly? Apparently so. The SEC requires all directors greater than 10% beneficial owners and executive officers to file ownership reports. The report states it's believed that all filing requirements applicable to the executive officers, directors, and greater than 10% beneficial owners were timely satisfied. This is the ownership section, which shows who owns a big chunk of Marine Products stock. As I mentioned before, it's the Rollins family and their related entities. The company is a controlled company because that group controls over 50% of the company's voting power. Finally, who's paying for this proxy solicitation? Marine Products is, of course. And now for the fine print. This report contains forward-looking statements, which basically state that the company isn't liable if they don't follow the claims they make in this statement. So what's my take on all this? Well, Marine Products is facing some real headwinds, but its strong cash position and commitment to returning capital to shareholders are definitely positives. The move to declassify the board seems like a good step towards greater accountability. There is a relationship between pay and performance at the company. The company's TSR has performed slightly worse than the Peter Group over the 5-year period ending in 2024. The company reported lower net sales and net income compared to prior years. For 2024, the company achieved its EBITDA target at the threshold performance level. Valuation-wise, it's trading at a pretty reasonable valuation based on the current market environment, but any further market slowdowns could hurt the company significantly. Considering the sector that they are in, I am slightly bearish on the stock. I think a reasonable price range for Marine Products is between $10 and $12. Thanks for watching, and if you found this breakdown helpful, please subscribe for more corporate deep dives.